Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment, this market is testing and rejecting a quite strong historical structure level, which was in fact acting as previous resistance here, preceding all this rejection to the downside. Then again, as resistance here, again as resistance here, then the market broke above that zone and all that previous resistance was turned support here when the market retested it, and now it is rejecting it to the upside. So from a monthly standpoint, we have a clear test here of previous monthly resistance turned support, actually previous historical resistance now turned support, and a rejection to the upside. We can also notice that if we look at the most recent price action, so this impulse to the upside that broke above the structure and then this correction, we can easily identify a clear impulse correction and impulse pattern to the upside. And if we want to measure this correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see that the area that the market tested and then rejected to the upside is exactly that zone in between the 0.32 and 50% Fibonacci retracements that was also lining up with this previous historical resistance turned support, therefore creating confluence of support inside of this area, which we could in fact expect this market to test and then to reject to the upside, which is what the market is currently doing. And inside of a confluence of support zone like this one here, you could expect to see more institutional longing. And we will be speaking about that in just a few minutes when we move to the order flow. So here on the monthly, everything looks quite bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we have a quite similar situation to that we have just identified on the monthly time frame. In fact, also here we can notice a very clear impulse to the upside and now the start of a correction. This impulse to the upside as well has broken above structure, because what we can notice here is that all this area in which the market created this huge wick, rejecting it to the downside, has been acting as resistance. In fact, also here the market tested it and rejected it to the downside. So all this area is now previous resistance and supply that is now turned support and demand all across this zone. And since also here we have an impulse to the upside and the start of a correction, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg. And what we can identify is that this area here, so the zone in between this wick and the 0.32 Fibonacci retracement, is actually a quite strong confluence of support zone, inside of which we could see and expect more institutional longing, which at that point could further increase the probabilities of a potential push higher away from this zone. Keeping that in mind and dropping down on the daily time frame, what do we see? Now, from a daily standpoint, I did speak about gold quite a few times in the past. I spoke about it when the market was around this area. I explained all the reasons for which we could expect this push higher. And then when the market broke above the structure and retested it here, I explained all the reasons for which we could expect this rejection to the upside, also away from that monthly support, which is in fact exactly what the market just gave us. And by the way, you will find those two previous analyses linked in the description, so you can go and check them out for more free education. However, at the moment, what kind of structure we have and where can we identify potential patterns from a daily perspective. Now, before we go into the technicals on the daily time frame, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing and how they're moving their orders. Now, what we have to identify here is that when it comes to the net positions, institutions went from having 131.1K net positions all the way up to having 201.6K net positions. So we had a huge increase of the net positioning with a massive amount of longs getting added on gold from an institutional perspective. In fact, we went from having a 211K long situation from an institutional perspective all the way up to 283K longs. So clearly institutions have been longing gold inside of that confluence of support that we have previously identified on the monthly time frame, and in the long run, more bullish continuation could be expected, especially if this institutional longing will continue. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find here on the screen and also linked in the description of the video, so you never miss new updates. Now, back to the analysis. Let's keep in mind that institutions are adding longs and move back to the technical side of the market. Now, what we can notice here is that clearly we had this strong impulse and now we're getting this nice slow correction. Now, I do expect a bit more bearish continuation because all the support that we have is around this area here. It is the zone that we have previously identified on the weekly time frame. So in a situation like this, in which we do have confluence of support from a weekly standpoint, what I would expect is that from a daily perspective, inside of this area, we could see more institutional longing because institutions already have been increasing their net positions for quite some time. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market inside of the confluence of support and we see more institutional longing, I definitely would not be surprised to see a potential push higher away from that area. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.